This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now to talk about Monday's market trade action, we welcome in our good friend John Heinberg with Total Farm Marketing in Wisconsin. And John, hope you're doing well. I understand you got a little dusting of snow up there in your area here over the weekend, John.
Yeah, it was actually kind of a tough weekend. You got the Badgers, you got the Packers, and then you go throw some snow on top of us on Monday morning. A lot of pretty grumpy people over here today. So, but just a little reminder this morning that we do still live in Wisconsin, and it is October. So just enough to kind of make the grass white today. But again, a reality check of that winter is coming. So
definitely. Winter is coming, and in some areas, those harvest windows are going to start to tighten up. And you know, we think about these markets, harvest pressure still out there, but overall, not a whole lot of fresh news on Monday's trade to really move us one way or another. We kind of leaked lower after some strength in wheat and beans and bean oil, but I know a couple items out there that really got us going, led by more Russian aggression in Ukraine overnight into Monday morning, John.
Yeah, we got that Reuters article earlier this morning just to talk that, Russian kamikaze drones hit a sunflower oil facility in Russia and Ukraine on the overnight. And that really gave that bean oil market a pretty good pop. Now, it was a port that wasn't doing any shipping, so it was stored supplies, things of that nature. Again, obviously, we won't know the damage of it, but again, we have a reactionary market. I think that helped beans out early. We got good set of weekly export inspections at 1.8 million tons plus for beans today too. But again, that harvest pressure probably just kind of kicked in and towards the end of the day today as producers are pushing through these beans. I'm really curious to see where we're going to be for the progress here this afternoon. Are we getting past that 2/3 window? I had a couple producers today told me that the basis for beans was improving for them a little bit. So maybe we're getting past that point where those beans that needed to be harvested and needed to be moved are in the marketplace. And now guys are putting things in the bin and the market saying, hey, we still need these beans. So we'll have to see. So harvest pace will be a key tonight. Corn right now, I think we're in the bulk of harvest there. Obviously, you got a wheat market that tried to rally off that news today, but again, just kind of fell apart, at least still hung on to some slight gains, off that Ukraine news this morning. So those two markets are just very lackluster today. But, biggest thing is corn's holding on to some pretty good support, holding that uptrend that we're kind of building here. So we'll see if we're at the bottom of the channel type talk today and see if we can get some strength going into the end of the week. But, really going to watch that harvest progress. I think that's something I'm really focused on today when those crop ratings and crop numbers come out.
Well, John, an interesting comment you made about basis maybe improving for some. I know it's a different story, whether it's the interior versus along the river, but I thinking about that thought of selling off the combine. I wonder how many guys and gals who have sold already. I wonder, are they going to wait a little bit to see what basis does here? And what are your thoughts on that situation? What should producers be thinking about right now?
Yeah, we had a lot of long conversations today with guys about different things. I think some of the wet weather gave them a little chance to talk and ask questions today. And, those are things we got to look at. Right now it's about this cash market. And, if you can put it in the bin and hang on to it till the first of the year, you're going to get rewarded on the basis front, at least at this time frame. And, that was something I was talking with a few producers about. Where is that basis for you? And some of them made the decision, let's go ahead and lock some of that basis in. Now, with that, and I'm very animate about this, if you lock in basis, you need to use a put strategy and lock in the floor. That way, you've at least secured the bottom side of this market and gives you total price flexibility to the upside. Again, we're a volatile market. We're a headline away from, seeing the money flow out of it. If you want a wake up call, go look what happened to livestock over the last month or so until this last couple of weeks. The funds that said we want out of cattle and hogs, and they took it to the woodshed. Same thing could happen in the grain markets based off of just the money flow. So that makes me nervous in this market overall, especially with that lack of demand chatter that continues out there. that if all of a sudden this market feels comfortable about the supply, even though it's still tight, that the funds could back out and drop this thing in terms of some value. So set basis, set your floor, keep your flexibility to the upside. If you move some bushels, especially in the soybean market, you know how volatile it can be. I keep asking that question, where's your risk? If you price them out at $13, well, now your risk is to the upside. So make sure we keep some ownership in. So there's a lot of different conversations I was having today overall in terms of what we're doing with these bushels as they're coming off the combine.
Now, on that point as well, I've heard some talk that there's some elevators in certain areas that aren't allowing any deferred pricing. They're saying you bring it in, you're taking cash, and that's it. Have you heard any of that? And if a farmer does encounter a situation like that, obviously they got to make a decision. Do I just take the cash now, or what do I do, John?
Again, that kind of pushes the eight ball. I haven't heard any of that conversations like that, at least with my producers in that regard. But it may be out there that they're going to force the hand to get these beans secured. Supplies are tight. Okay, 200 million bushels of carryover on beans is not a lot of wiggle room. We do see some demand heat back up. We do see another yield cut. Next thing you know, we're sub 200 going into the first of the year. That just seems really nervous to me for the marketplace. And $13 are probably undervalued, and especially if there's any issues in the South American weather. So in that regard, again, producers, if you do have to make that move, you have to put the price on the beans. Where's your risk now? It's to the upside. Let's get out into March. Let's get out into May. Find yourself a call strategy of some form, whether it's just owning an out of the money call or a bull call spread. Or futures and buy the put underneath of it, just to get yourself that upside window to the out into that time frame, because we both know if South America does have an issue, I think this market is really pricing in that South American crop as being there, and if it shows up that it does not, this market could have extreme volatility again, like we've seen the last couple of years, getting into those late winter months, early spring.
Any worry about those NOPA crush numbers today, John? I know they came in about 3 million bushels below trade expectations. I'd have to think that also gave support to the bean oil market today.
Yeah, I think that was part of the factor there. But again, you got to ask yourself, when was that crush done? Did we have the beans available, period? And probably answer was no. We saw constantly through the export shipment numbers through those last handful of weeks. Now the crush number just told us those beans weren't there. It makes us question that USDA grain stocks report a little bit, again, in terms of the number of bushels that are out there. But at the same time, if those bean supplies were tight, those crushers didn't have those supplies available. Plus, that was kind of in a window. Soybean meal market wasn't, in the best of place, and it was down during that time frame. Bean oil market was down, so some of that demand may have backed off there. But to me, not too worried about it, especially since the USDA basically said, crush next year is going to be up another 10 million here on the next report.
On as well, just thinking about this wheat market too, kind of circling back to the Russia-Ukraine thing. Obviously, it's going to be a headline-driven market, it feels like, moving forward. But it seems like, once we got past that news, we just kind of took a little bit of profit there because there wasn't anything else to move us higher on the day, John.
Yeah, the wheat market really took a tumble last week. We kind of rallied up to the December 950 on that Chicago contract, kind of completing that round bottom I was talking about here. Basically that goes back to that July spike high that was out there. We kind of matched that area, couldn't get through it. So we saw the sellers kick back in. Now the question is, typically when you get that round bottom, you build a little bit of a handle off that. That's kind of maybe what we're looking at here. If we can get some turn into this market, and then we got a chance we can run this out again. But that's going to take some news. That's going to take some demand news, a weaker dollar, something on the global scale to make this market move. Maybe it's a tightening Argentina wheat crop coming into play. Maybe we see some demand that we're not counting on out there that could come into play, as well as don't forget about the Southern Plains weather. There's still some room, I think, for this market to want to move higher here if we get the right news. The funds are still a little bit short the wheat market. They're really long on corn. They got a moderate length on beans. Do we start seeing that wheat market versus corn type move maybe come into play a little bit? Some of those spreads are really kind of a skew right now between the two. So we'll have to watch how this plays out, but still like the wheat market a little bit going forward, especially if U.S. weather can stay a little bit difficult for the planting window here for winter wheat.
Jesse Allen with you here today on Market Talk. John Heinberg of Total Farm Marketing is our guest on the show today. John, I found it interesting as well. U.S. dollar broke on Monday. The stock market took advantage, and livestock did as well. We're going to talk livestock in a minute. But the break in the dollar didn't really help out the grains, and even crude oil kind of backed off as we went through the day. John, what do you make of that?
Well, you go look at the dollar index. That's a chart that got tired. First off, we put that spike high in. We got over that 114 basis point level, corrected down, rallied back to re-challenge it, did not take out that previous high. So now we're starting to build a series of lower highs. That tells us that this market might be ready to trend a little bit lower here, at least in terms of the short term. The currency trade is not a day trade; it's a week trade. It's a trend type trade. We got that reversal, a couple days ago at that 113 spot. When we failed to get to that next high. Now maybe we're seeing some push. Now, I'd say we're going to fall out of bed here, but it wouldn't shock me that this dollar goes back to the bottom and trendline support. That's around that 105, 107 area, somewhere in that window. That'd be really helpful for the commodities sector in general. Right now the dollar trade is probably a little bit more based on the other currencies versus the U.S. or the economies of other countries versus the U.S. That's what's causing the real strength in the dollar. It's just the traders betting against the U.S. economy against other economies, and we've seen those other currencies, the euro, the Japanese yen, those types of trades really have worked well in that regard. So we'll have to see. So is the dollar maybe overvalued here based on just some of those trades? More than likely. That's some of the reason too. Maybe it hasn't had the impact on the commodity space like it could have, because it's more of a trade type play versus an actual reality in terms of where dollar value is. You go look at our competitiveness against the Brazilian real. There it's actually worked into the point where it's kind of friendly, still kind of keeping some support into our market based on the strength that the real has shown versus the dollar in this window.
John, let's give some time to our livestock guys and gals today. Really solid day there. Cattle and hogs, especially nice reversal around mid-morning. Let's start with that hog market first. I mean, it kind of took off there, and now it has me believing that December contract might make the run up to the cash index after we saw the good strength on Monday. Can that parlay itself into the rest of the week, we wonder, John?
Yeah, it's something I was kind of curious to see how this market was going to react. Typically, when October comes off the board, December's a sell. You go look at the historical side of it. If you're short on December hogs on this day for about a week or two, you usually kind of come out as a winner. But obviously, that trade did not work in this regard today, and that was because of that discount. I mean, you had done a $10 to $12 discount to the index, to the cash market. So I was kind of curious to see where this wanted to go. Now you go again. Talk about the fund money. How that money was flowing in and out of the market. They really, really took a lot of length out of the hog market. It looked undervalued to me in that regard, and we saw that money move in. And, on top of just the strength, the technical move today to get all the way through the moving averages, close above the 100-day in December, that's going to keep those buyers fairly active, at least in this short term. I think a lot of this is tied to that Chinese pork price, what's going on there as well. Chinese pork prices continue to run higher. We did see them in the export market last week in the weekly export sales as the second largest buyer. Saw good shipments there. We expect them to stay in the market now as retail values are still fairly cheap compared to where we've been just over a handful of months ago. And I think that's got some anticipation in this market. Then you just throw the tight supplies in. And again, that hog market looked undervalued, and it compensated that for it with the strength to start the week today.
How about in the cattle trade? Fairly decent strength there as well. Maybe taking advantage of the break in the dollar. I know we have a cattle on feed report coming up on Friday. I would have to think the trade probably somewhere around midweek is going to start squaring up positions ahead of that report, John.
Yeah, I think that's something we'll see as the week moves on. Again, we'll probably expect to see the cattle numbers steady to maybe slightly under last year on the overall feedlot side. We had all those weaker placements back in the spring and summer, and they should be starting to show up here now. We'll watch that placement number. That always seems to be this head scratcher. Is like, where did these cattle come from? Cattle slaughter in terms of cow slaughter continues to run at a record pace over last year's record pace. So that just tells me supplies are tight. The biggest move, I think, today, too, we saw that big jump in the equity markets that made just some money flow come back into cattle that turned the corner in terms of length on the cattle market. Funds actually were still short about 10,000 contracts of feeders, and that's rare for them to be on the short side. So obviously they're bailing on that type of short covering and getting some length back into the market. I think that attributed to things as well, as well as just that softness in the corn market overall. But again, it was another market that's been kind of building here. I was a little nervous talking to a few cattle guys this morning saying, at that live cattle, if we could see a break and go put a low in, kind of like feeders did here last week. But at least today, so far, we got to move to the high side. Again, there's still good anticipation. Cash will stay strong. Choice select spread is strong, telling me that, we'll still see some good demand for that retail beef. Packer margins are getting tight, so that might be something that limits any cash move. But this market's at least optimistic right now, going in maybe the next few weeks here, that the cattle market can go ahead and push it a little bit higher and maybe get back up and challenge some of those upper levels.
John, how about our dairy producers? What are you seeing with that dairy market as we start the week?
It was a difficult week last week. We had a pretty big drop in cheese right towards the end. And, that put the hammer on the dairy market overall. And now we did see some price recovery. Saw a nice recovery in cheese prices today as well. So to me, it feels like maybe we hit the bottom of the range again, but I'm cautious just the way the charts are looking after the strong push lower towards the end of the week last week. But maybe we can find some footing here. It sounds like demand is still pretty good, especially on the export side. We'll have to just continue to see if, what happens with that cheese trade, because that's still the key in my mind, is what happens with cheese and butter prices and the use of that product.
Well, John, before we let you go, any other final thoughts you have for us here on the show today?
I kind of talked about it in the grains, and that's going to still be the focus. Make sure you're asking yourself, where is my risk? Again, if you're selling the product, your risk is to the upside, especially in the soybean market. Maybe not so much in corn. We're at 680, 690, where we typically get to historically. It's going to take something to really get a run out. But then the other side of it, if you're storing the product, protect the value. Okay. And again, headline driven market, a lot of volatility, wouldn't take much. And we could see things really roll over on money flow issues. So that's something that's always a concern to me. And that's really what I've been talking to a lot of producers about. So make sure you're staying active, watching your cash market, watching your basis, and protecting yourself where the risk is.
Well, John, if producers need some advice, maybe they're right around the combine, finishing things up, have a little time to chat on the phone, or get a hold of you guys and talk a little bit about things with Total Farm Marketing, what's the best way to get a hold of you?
Sure, love chat with them anytime. Feel free to give me a call, 800-334-9779. Shoot me an email, johnh@totalfarmmarketing.com. Don't forget about our website, totalfarmmarketing.com. I had a lot of really good conversations with producers today, so feel free to pick up the phone, no obligation, to just give us a call and ask questions and see what types of services we can offer.
John Heinberg with Total Farm Marketing. Always a pleasure, sir. Enjoy the rest of your week, and we'll talk to you again next week.
Sounds good. Have a great week.
And that's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.